Hello everyone and welcome to another edition of the Forex Technical Market Update for Friday, September 18th, 2015. And yes, the Fed announcement occurred yesterday, and in the currency markets the reaction was pretty muted actually. Yes, the euro did rally against the US dollar, but the reaction wasn't as volatile as what happened in stocks. The market rallied on the news and has since pulled back. Now, because the market has rallied, it brings into focus this spike high of this 117 area, and the market looks like it wants to retest this high at 117 on the euro currency. Because taking a look at the euro, we have been slightly positive ever since the market kind of bottomed out in March, and the market looks it's trading with a bias slightly to the upside, and it looks like it wants to take out this 117 area. Yes, we are pulling back slightly this morning, but we'll wait and see what happens with the markets. Now, resistance in this market is up at this 117 area, and support is still down by this trend line, this rising trend line that we are seeing here. There's an inner trend line from the previous low. This is an inner trend line that you will see it more clearly on the 4-hour chart, this inner trend line. So these are the areas of support, this inner trend line and the outer trend line that we can see. So that is what's happening in the euro, and the interest rate decision could have given the euro some room to actually rally. So we're going to see exactly what is the reaction next week to see if this market continues to the upside, or will we come down and come back into the consolidation zone and test this trend line. That will be very important to see. The British pound also rallied on the news. The market is up after bottom in at this 152 area of support. The market is up to 156.04, and now resistance in the British pound is at 159 and support is at 152. So we can draw this area here, as you can see. Now, taking a look at the US dollar index to kind of see what is happening, the market, some are arguing that this is a 1 2 3 top. The market went up. This will be 1 2. It's not a double top. 1 2 3 top. The market broke down, and some are arguing that this is A, B, this is a retracement to C, and the market is on the way down, heading down to D. That's argument number one, and that is the argument of the US dollar bulls, or the US dollar bears, sorry. So they are anticipating that this market will break below this area of support that has held the market. And I suspect if we do close below this area of support on the US dollar index, we will get a fairly strong move to the downside. Because remember, although the euro did spike up, this was the day the euro spiked to 117. It did not close on the US dollar index. The market did not close below this area of support on the US dollar index. So let's just look at the euro. Okay, we see the spike up. We see that the market closed on the euro above these highs here. But this spike up did not close on the US dollar index. And that's why it's important to look at the US dollar index also. Let's take a look at the US dollar index. See, the market did not close below. And if it did close below, that would have technically, looking at technical analysis, given the US dollar bears some greater evidence to sell the market. But because the market did not close, then we have resettled. So we are going to see now what happens now. Will this market close below and head down, or would we get another support point, and this market rally from here and rally out of this triangle. So the market can essentially at this point in time go anyway, and and as an investor, you just have to keep your powder dry, and do not be convinced that definitely the market is going to go this way or the market is going to go that way. When you are swing trading and you are trend trading, these situations can be fairly frustrating for you because the markets are essentially moving sideways, and there is not much direction. But on the positive side, when the market does break out, and the longer this consolidation lasts, the greater the breakout. And when it does break out, as a swing trader and a trend trader, you will get some good moves and you will see profits accumulate fairly quickly. And just remember, when the markets do move, a common tactic is to take, let's say the market breaks out of this consolidation, let's say it goes up, clears this 100 level. A common practice is for investors to take off their profits too quickly. You have to have a strategy that will keep you in the trade if the market does move, because remember, you have been waiting for the breakout for how many months now? For 4 or 5 months. Okay, so when the breakout occurs, you have to have a strategy to take at full advantage of the breakout and not take your profits too quickly. So that is definitely something we need to keep an eye out on. Japanese yen on the news rallied or went down. Well, the Japanese yen rallied against the dollar on the news, but the market reaction was fairly muted, and we're still in this consolidation pattern here on the yen. This is what's happening. Market's in a triangle, and we're looking to see if the market can break in either direction out of this consolidation pattern. Gold did rally on the news and is rallying again this morning, but just remember, gold is still in a downtrend, and the next area of resistance in gold is this trend line. We're going to see if the market is able to, what the market's reaction to this trend line is. For gold to start, for evidence of a bottom in gold, we need to see the market take out some of these highs before we say that this market has bottomed. But we have been saying on this technical update that this market's in a bear trend and all year essentially, and this market still remains in a down move. But as I said, next week should be very interesting for the euro. We are going to definitely get some more evidence as to which direction this market is going. As you can see, the market, let's dig down to the 4-hour chart. The market is retesting this swing high, and it's amazing sometimes how the market can just test this level. So it's testing this level at this point in time. And just remember, this market is rallying, and we want to see if it can hit the 117 level. And if it doesn't, we are definitely at risk of breaking down into the 105 level if the market fails to break above this 117 level, and you could get another move down in the dollar versus the euro. Okay, if you would like to have, it's the end of the week. It was a very interesting trading week. But if you'd like to have the signals, Forex signals, sent to your account, please click on the link below to get started. Because as I said, and I keep saying, this is the last third of the market, and this is often the most active time in Forex, and this is where profits can accumulate fairly quickly. So get started now, and I hope you have a wonderful weekend, and we'll see you again on Monday. We'll be here bright and early on Monday morning. Thank you very much for listening, and best of luck.